while the average retail investor is glued to their screen, watching the daily fluctuations of the S&P 500 or chasing the latest viral meme coin, something massive and very quiet is happening behind closed doors. We are officially in the midpoint of 2026, and the economic landscape has shifted. The smart money isn't just moving, it's going invisible. The ultra-wealthy, the top 1%, are quietly exiting the very markets they spent the last decade telling you to buy into. They are liquidating positions that once seemed untouchable. But here's the mystery. They aren't just sitting on piles of cash while inflation eats it away. They are pivoting into a shadow class of assets that 99% of people haven't even heard of yet. If you've noticed that your portfolio is barely moving while the cost of living skyrockets, you aren't imagining it. You're being left behind by a system designed to protect the elite. In the next 8 minutes, I'm going to pull back the curtain and expose the exact 3-step blueprint the world's most powerful families are using to crash-proof their wealth this year. Pay close attention to move number 2. It's the one they are trying the hardest to keep under wraps. If you look away now, you might be making the biggest financial mistake of your life. To understand where the money is going, you first have to understand why it's leaving. We discussed how banks invent money out of thin air in my previous video, but in 2026, that magic trick is starting to fail. The global debt ceiling hasn't just been hit, it's been shattered. The 1% trade on information and cycles, not on news headlines or emotions. They see the black swan events before they appear on your TV screen. Right now, the smart money sees a liquidity trap. They realize that the traditional banking system is becoming too fragile for their multi-billion-dollar fortunes. This is why we are seeing a massive shift toward private credit. Instead of putting money into a bank where it's a liability, they are becoming the lenders themselves. They are lending directly to the world's most vital industries at interest rates that would make a traditional banker blush. They are capturing the cash flow while the average person is stuck waiting for a 0.5% interest rate on their savings account. They aren't just playing the game anymore. They have moved outside the stadium. So, if the 1% are leaving the traditional stock market, where exactly is all that capital landing? It's going into what we call non-correlated assets. First, the elite are buying up massive amounts of farmland. You might have seen headlines about billionaires like Bill Gates becoming the largest private farmland owners in the United States. Why? Because no matter what happens to the dollar or the banking system, people will always need to eat. They are moving away from digital numbers on a screen and moving toward physical survival and tangible land that provides real value. Second, they are hoarding physical liquidity. We aren't just talking about gold bars sitting in a bank vault, because as we know, if the bank closes, you can't get to your vault. They are moving into private offshore storage that exists outside the standard banking jurisdiction. They are preparing for a system reset where the old rules of banking won't apply. The question for you is, how do you protect yourself? You don't need $1 billion to follow this blueprint. It starts with financial decoupling. Stop keeping 100% of your net worth in a single banking system. Diversify into physical assets, look into international markets, and most importantly, keep educating yourself on the money cycle. The window to move your capital into these safe havens is closing fast as we approach the end of 2026. If you want a specific breakdown of the physical assets that are still affordable for the everyday investor, comment the word SAFE below. And to understand why the banks are so desperate to keep you in the system, you must watch my deep dive on how banks invent money right here. Stay smart, stay vigilant, and I will see you in the next video. Take care.